Welcome again, and it's very exciting to have our distinguished panel today. And as the topic suggests that all of us are digital asset and crypto fund manager, and I'm hoping to have the feedback as well as looking forward to learn from each of our panel. And today I'm very honored to be the moderator. Let me introduce myself. My name is Meng. I'm running a family office fund based in Singapore, and we invest in venture funds. We invest into private equity funds, as well as we do direct investing. And I'm a fond believer of venture investor. And with all these crypto and digital assets where it's getting so mainstream, I'm looking forward to also work together with the whole ecosystems and invest to create this vibrant, safe, and high value growth alternative assets to come. So without much ado, let me just allow the floor to give introduction of themselves so that we can kick off this session. So perhaps I would like to invite David first to give an introduction. David, the floor is yours.
Thanks, Meng. So I'm from Monochrome Asset Management, and we are based in Brisbane, Australia, and we are offering a passive investment strategy into Bitcoin. So it's into a wholesale unit trust, enabling people to basically access the digital asset space in a secure, regulated environment. There's not a lot of bells and whistles to what we do. It's just basically providing easy institutional and fiduciary access into a regulated structure here in Australia. And our view is that there's going to be a need for more regulatory certainty in the digital asset space, and by providing regulated investment vehicles into sort of passive strategies is a good way to help investors in that sort of changing regulatory landscape.
That's good. And followed by Patrick, please.
Hi, everybody. Thanks for joining us. My name is Patrick Tan. I'm from Novum Alpha. Novum Alpha is a digital asset quantitative trading firm. We are regulated by MES. We are one of the first few algorithmic hedge funds that trade exclusively in cryptocurrencies based out of Singapore. And we've been, the Novum Alpha Global Opportunity Digital Asset Fund actually represents the combination of almost a decade worth of experience trading our own monies and our own prop desk in digital assets. And what we've launched is a digital asset quantitative long short strategy with discretionary overlay. So hi, everybody. Excited to be speaking on the panel.
Thanks, Patrick. Erin?
Hi, so my name's Erin Grover, and I started out with a crypto algo fund 5 years ago, and then out of Ireland and moved into just direct client placement. I went through a worldwide search of some of the best funds and did some serious due diligence with my team of advisors who are from the traditional space, working at places like Goldman Sachs and Fidelity, but now they have their feet in crypto too. So after this due diligence process that took about a year, I'm pretty sure I found some of the best funds in the industry. My clients are happy, but the fund that I mainly work with is called Iconic Capital out of Amsterdam. So they're 4 years running and strong. And then I am about to launch a Bitcoin ETF. I cannot say anything more than that. But when it's more public, I will follow up. And then I support people to invest in, VC that is anything related to blockchain and impact in society. So for example, I'm bringing investment to a upcycled paper company in India And the agreement is that they will put their supply chain onto the blockchain to receive the investment. So that's just a nutshell.
Excellent. I think looks like you are very much a blockchain advocate. Excellent.
Yeah, I'm busy.
Good. And Dominic, please.
Yeah, hi everyone. I'm Dominic, based in Germany, and one of the founders of Blockwall Capital, which is a blockchain VC platform, basically. So we try to invest along the entire scope and offer investors also that access along the entire scope of blockchain. So the first fund we set up was pure crypto play, so decentralized networks, protocols as such. And secondly, we set up a fund which is a pure equity investment scheme where we invest in startups actually using blockchain technology. And the thesis is around that on the one hand side, the market is becoming more institutional. So we see a lot of necessary services developing around that. And on the other hand side, we see B2B SaaS as a very interesting play where startups are using the toolbox which blockchain offers to solve critical issues. And that can be from supply chain to mobility in the energy market. And we see that very holistic. That's also why we set up the Blockchain Research Institute here in Europe, where we engage a lot on the corporate side to see where the real market need is. And I'm heavily engaged in different consortia, and venture is a passion of me. That's why I'm, for example, also a member of the Kaufman Fellow Network, which is a global VC-focused network.
Yeah, Dominic, we know you've been doing a lot of work, and you should come to Asia and Asia Pac and help us to contribute more in this part of the world.
Yeah, I hope that I'll be able to travel more in the future.
Good. Yeah. And last but not least, our Queenslander.
Thank you. So my name is Grant Colthup. I'm the CEO of Mind Digital, but I came from previously have held roles trading interest rates at an investment bank, previously traded at a proprietary trading firm, trading interest rate relative value structures, and then also worked for Australia's largest insurance company, running again their balance sheet and running all their basically head of trading and hedging program there. Since end of 2018, I've stepped full-time into crypto, came into crypto in 2016, have been actively involved across the entire space as an investor, but also as a trader. So oftentimes as Mind Digital, we will be, the start of this year, we were oftentimes in the top 10 volumes traded on Deribit and Ethereum options. And I'm also personally an equity investor into a leading crypto multi-strat hedge fund called Orthogonal Trading.
Sounds interesting. So I think all of us seems to be really excited into this new field of the crypto space. And we know that the past coming to 2 years, we are all very much in the lockdown. And therefore, a lot of the due diligence has been very much limited. So just perhaps share with the floor, what do you think about this COVID-19? How does this impact the investment strategy of yours? Anyone? Maybe Patrick first?
Yeah, maybe I'll take that. So we got started in cryptocurrencies as far back as 2012, not because I'm particularly astute or anything. It was just by luck. My brother happens to live in San Francisco. He heard about it from some friends in the Valley in 2012. Told me about it. I thought it was a scam. Only really started reading the white paper about 10 months after he recommended I read about it. So we've been in this space for coming to a decade, and we've lived through many cycles where there have been periods of introspection because you dedicate your life to this space, and then obviously with the market, which it's doing right now, even as we speak. You do face these periods where you go like, have I made the right decisions in my life? I'm committing to this thing, and this thing looks like it could be gone tomorrow as an asset class in general. So what I think definitely, at least in terms of our business, was that the pandemic just provided us with this incredible opportunity. Of course, the pandemic was unfortunate, but it provided this incredible narrative, which I don't think we had prior to this point. Because prior to this point, you could just look at it as one of many different speculative assets. But when now you have the situation where you've got this unprecedented flood of liquidity, both from monetary policy, from fiscal policy, when you have investors getting free stimulus checks, and then now starting to question about the debasement of fiat currencies, which, mind you, all of this is still driven by narrative. That actually creates an incredible narrative from the investment perspective as to why this becomes then a considerable investable nascent asset class, a narrative which you couldn't possibly or probably carry if not for the fact that we're living through such extraordinary circumstances. Now, I don't want to say that the pandemic is good in any way, shape, or form, but in terms of the leaps and bounds, in terms of the advancement of this industry, when we were looking at it in 2018 during the depths of the crypto winter, when Bitcoin was about like $3,400, when nobody wanted to look at it, there weren't many clear catalysts as to what would lead it to push forward and then emerge and evolve as an asset class at all. And the pandemic, ironically enough, was a twist that the plot needed for people to even look at it and take it seriously. And what we've seen then from 2018, which is around the time where we wanted to start a hedge fund, but the service providers really just hadn't caught up to speed to provide us with those institutional grade protections that we now take for granted. And we've seen that movement and that transference. So I don't want to say that the pandemic is good in any way, shape, or form, but in many ways, the pandemic was a blessing that this whole space needed.
Correct. Yeah, fully agree. So what about Erin? You've been traveling a lot. How does it hit you in terms of your investment plan?
Sorry, how does it
affect you with these COVID restrictions and?
Well, in my travels, it's just, the usual day-to-day of multiple PCR tests. But I mean, as far as my business, I agree. Like, it's an amazing that the COVID has been a silver lining and a complete blessing. Just because it's like, it kind of sifts the oil from the water. And one of the things that happened for me in COVID is that people usually have asked me in the past, like, what's your doomsday scenario and where will my assets go? Will they go down to zero? And March of 2020 was a great test of that. And a number of crypto funds failed and closed down, especially the crypto algo funds. So luckily the main fund that I work with did really well in March of 2020. So that's been huge. I hope that helps.
So, what about, I know, Dominic, you've hold quite a number of American portfolio as well, and you've been investing cross-Atlantic. And so how does it affect you?
Well, we are basically a long-term investor, right? Our first fund is on a 6-year period. Our second fund is on a 10-year period. So we take a very thesis-driven long-term approach. Many of the assets or investments we do, they aren't liquid at first, right? And we still have a lot of illiquid assets in the portfolio. But for us, we always try to keep enough cash reserve so we can reinvest in such times. And for us, it was a great opportunity to double down on those assets we really believe in. And it was an opportunity. On the other side, it made it very difficult for due diligence. So normally we would visit the teams, we would meet them in person, we would do intense workshops to kind of get to know the team better. That definitely that was a twist. And also for fundraising itself, we kind of look to enlarge and diversify also our LP base to go more abroad. And in the end, that makes it also difficult if you can't travel. An LP is very unlikely, if it doesn't know you before, to make a commitment there. So it kind of moved back the focus on a more geographical European level where the cross-border is very close. and made a lot possible.
Right.
Yeah.
And David, you're based in Sydney, yeah?
In Brisbane. Yeah.
Brisbane. Okay. So how does the Sunshine Coast hit you?
Well, we've been pretty lucky on we haven't had very many lockdowns here, so it hasn't been much like a pandemic like most of the rest of the world have experienced. So we've been quite blessed, but that hasn't really affected our business so much. But that's just been one of the upsides of living in Queensland. So that's probably an advertisement for coming to Queensland when the borders open, more than anything. But in terms of sort of how the pandemic has affected the space more broadly, I mean, I'm sort of, the jury's out to me as to whether this is just an experience of a liquidity injection, therefore rising tide lifts all boats, not just in the crypto space, but in the venture space more broadly. So, we're only invested as a business in Bitcoin, and it's a Bitcoin tracker fund. And personally, I take comfort in that simply because there's quite a community of Bitcoin supporters that are effectively dollar cost averaging into the asset class on a daily, weekly, monthly basis. And if you look at the sort of supply and demand dynamics of that, well, we know what the fixed supply of Bitcoin is, and you can roughly estimate what the believers in Bitcoin are doing every time the price of the Bitcoin falls. So, in the event that the tide goes out from a liquidity perspective, I personally feel reasonably comfortable investing in that as an asset. I'm not as confident or certain. I mean, nothing's certain in this world, but I'm not certain what an impact on the broader sort of asset class will be in the event that the liquidity rug gets pulled from the space or from the world more broadly.
Right. So, Grant, would you agree with that? How is this?
I think there's some really good points that have been made there. I think, as David said, I think on the aspect would a broader liquidity tightening hit the space? I mean, obviously, I think that's a yes, but how exactly that would trickle down is to be seen. I think the crypto ecosystem overall, those become certain pockets have become much more resistant and much more ability to have some real have real liquidity and activity ongoing in them, which makes them less susceptible just to these one-off liquidity events. But in saying that, I mean, we constantly see that occur, right? I mean, we saw it even last night. We just saw that the market can gap out and have really large moves on the basis of very, very little. So, I think we live in a asset class that is, the best, almost, no offense to anyone, it's almost schizophrenic, and it is still trying to understand its behaviour as an asset class. As a person who worked a lot in his career within tactical asset allocation, building those types of models it's not an easy asset class to describe. Obviously, from a multi-generational investor point of view, like yourself, it makes sense that you need access to it and exposure to it. But how you model that within, say, an active multi-asset portfolio is pretty difficult. I think for most people at the moment, it comes down to their liquidity profile, their age, their income, etc., is how much they can really, access it and get into it. I think for someone who needs to get protection against potentially long-dated cash flows, and you can stay in it for a long time and not have to realise it, I think it's a fantastic asset class. I think for those who require cash flows on an ongoing basis and need those cash flows to meet liabilities, it's probably a very, very less appropriate asset class.
Yeah, absolutely. Now, I think, if you look at the overall investing strategy, I think you can't put all these eggs into this fast-growing asset, yeah. And at the end of the day, we still have to diversify ourselves. But I think seeing that the market is towards so much the growth in this space, and this growth seems to be very consistent despite a lot of fluctuation. So if the retail investors are listening to us today, okay, as a professional investor in this space of us, and would you be giving perhaps your own feedback as to will you be, if you are a retail investors, be putting more money into this area?
I think that's if I could there, I think that's an interesting question. Being a regulated hedge fund, we can only really cater to accredited institutional investors. I mean, that's the law. And I just want to take up something that Grant had said earlier with regards to retirement obligations. It's interesting because I just got off the phone earlier this morning with the prospective client, and he's actually quite a senior gentleman. And he's obviously a retiree. He's a high net worth individual, and he told me that was his first video call he's ever made. So and clearly somebody who's just done his first video call. This is not somebody who's going to be having a ledger or a Trezor or something, stashed away somewhere. He said that, he's never used, he said he was introduced to Zoom, but somebody had to set it up for him. And this was his first Google Meet call. He felt really accomplished having done it. And now he wants to invest into a crypto hedge fund. I said, that's a huge leap. We're talking about like walking on the sidewalk to flying a spaceship. And I said, this is incredible. And I said, my hat's off to you because you're quite clearly quite forward thinking. And that's probably what's helped you. He's an Australian as well. And I said, that's probably what's helped you do so well in your life. And he was like, yeah, this is an interesting asset class. I heard so much about it and I want to get involved and engaged in some way. And you know what, I'm willing to stomach the risk. And I think that's to your point, Meng, in terms of like whether retail investors have to look at it. And there's a good reason why so many regulatory authorities protect retail investors from these sort of exotic instruments, simply because is there a non-zero chance that you could lose your shirt on this? Absolutely you could. A non-zero chance doesn't mean that there's a high probability. It just means that it's non-zero. So we've seen, and as we've lived through, as all of us have lived through, the crypto winter of 2018, surely at some point in time, because you'd not be human if you didn't do that, you would have asked yourself, it's like, did you necessarily make the right decisions with respect to this space and investing the time and effort and money into this space and to get involved in this space? And for retail investors, I think oftentimes, but we're seeing a change in that. We're definitely seeing a shift, but oftentimes there's this mismatch expectations because of this whole excess of liquidity. You have all these meme stocks and stuff like that. People have misguided expectations as opposed to when they look at cryptocurrency, they just think of, I want to get rich quick. If you're going to get rich quick, then you're just going to lose it just as quickly as you approach it. So I think with respect to retail investors, I think it does well for you as a retail investor, just with any other investment instrument. It could be property, it could be private equity, it could be anything else. You do need to invest in the education first before you then make the investment. And if you can be bothered to take the time, I mean, the Bitcoin white paper is like all of 8 pages and it's pretty easy reading, so even if you're not technically inclined, you at least you'd understand the game theory that goes behind it, because that's pretty self-evident from that in itself. So if you invest as a retail investor, and if you've invested time to do that research, and I do know of retail investors who do very well trading off their own cryptocurrencies as well. And it doesn't mean that because you're a retail investor, it means that you're not going to do well. It just means that, you have to approach it as you would approach any other investment class, which is to take an educated, a rational approach to it, see where it fits into your portfolio. If you want to go sort of like balls to the wall and go all in on this thing, then you have to accept that there are going to be consequences to that, as with anything else. So I understand where regulators are coming from. This is a particularly challenging space to regulate. It's not straightforward. There aren't any, even look at what the FCA did with Binance. They kind of like put up their hands and say, you know what, guys, we would love to, but we really can't regulate this thing. This amorphous, decentralized entity that exists everywhere but nowhere. We're doing what we can, but really, you guys are on your own if you go into these things. And I think that's fair. I think that's all a reasonable regulator can do because it's honest. And I think that the regulators need to do what it takes to be honest about that. So I think from a retail investor perspective, you have to understand what your liquidity needs are going to be like for the next 3 to 5 years. Because if you're going to start putting in significant amounts of investment into this thing, you've got to recognize that you might not be able to get out. It's like the Hotel California, you can check out anytime you like, but you can't leave. So that's something that you have to look out for.
Yeah, absolutely. Fully agree. But, given this post-pandemic, the case that we see is a lot of retailers are banging on this big time, right? I mean, income, revenues, all these things has been all affected. Jobs is at stake. So the only way for them is to get into the casino and play like a casino, right?
I can see the temptation, but I mean, to be fair to these retail investors, it's not just them. The pension funds are looking at it as well, simply because, you built your pension around the fact that your pension obligations would be able to be paid out on the fact that US Treasury, a 30-year, 10-year US Treasury would be paying out 6% per annum. And now it's paying out what? 1.37%. So, and that with mounting retirement obligations, you see pension funds themselves heading into the casino as well, taking on greater risk. So how can it would be hypocritical for an institutional investor to then say, look, hey guys, we're taking these sort of risks with your retirement portfolio, but no, you guys stay out of the casino.
Correct.
Which
what
I
do
think.
You say, Grant? Sorry.
Sorry, Meng. I think that talks to that idea that the space is going to get more heavily regulated. I mean, it has been a retail-driven market in its early days, and now, as you described, there's more and more people sort of turning up to the casino, and the regulatory sort of purview has always been about the law around property rights and consumer protections, and that all kind of is directed at the retail part of the market. So to think that this space, the regulators are going to put their hands back and not regulate, I don't think is realistic. And I think for the space to grow, institutions require more regulatory certainty. And you certainly in Australia, we're seeing that coming. With the ASIC consultation papers and the like, we're seeing more eyes on the space with the view that it will become more regulated.
Correct. So, Erin, sorry.
I think also
Dominic, please.
Sorry. I also think what we mustn't forget, if you look at of course you have the financial upside, but at the moment we see a lot, and that's also, especially if we look at some business models. Let's take, we looked at one European African remittance business, for example, and the effect and the impact for retail using crypto in that sense to be able to pay remittances between countries. And in this case, it was 500 million in remittance payments between UK and Nigeria within the last 12 months. It's incredible what that can have a positive effect on the people actually using it. And they just come into contact with crypto because it solves a major issue. It helps them to reduce the fees. It helps them to avoid transaction risk between, for example, pound and naira. And that is a huge effect. And I hope that we see more intrinsic usage from retail, and we see those business models really work. And I think that is the real proof that crypto is more than just a speculative casino, and that it can be used for good. But in this sense, also regulation is necessary, right? There is a lot of malicious acting in this space. And if you do it right, and if you take the right regulation from a company perspective, then retailers are, of course, more protected. They can really enjoy that impact it then offers.
Yeah, I'd like to add to that. This is why I do my due diligence for my clients and everything that I'm involved in, because I care and I want to protect people. And now I have more and more of a public platform. So I have to live up to that, tenaciously, pretty much. But there's some really cool products out there. And I, other than working with crypto funds, I really care about transactions and remittances. Electronium is popular, a popular app, and people are using it all around the world. Just some statistics, just so you know, half of the world's crypto users are in Asia now. And of course, Nigeria is massive, where adoption is the highest amount per capita over the past year. But there's also a product called Cello that's being used a lot for remittances. and the unbanked. Electronium is using European standard KYC AML, just so you're aware. They're doing a lot of innovation for the unbanked to even be able to go through the KYC process.
And this is I just was yesterday at a circular event of BMW Group here in Munich, and they recognize this potential, so that you have this massive amount of buy-in from corporate side is incredible. For example, Deutsche Telekom here is and T-Systems is one of the biggest validators in Polkadot network, right? And you have this, if you look in the innovation laboratories, what is happening, and you see more and more spin-outs out of these corporates, great ideas, great companies in the blockchain world. And we've been talking a lot with Bosch, for example, with Siemens, with Novartis, and many of them, they invest in both, right? They invest in startups, they invest in token, and they understand the intrinsic value which is in these tokens. And so I don't see it so much as it's of course you have speculation on top, and you have volatility, which helps many business models work, but we're past this point that we're discussing about intrinsic value of some of these protocols.
Yeah, I think the whole tide is changing towards positivity, and this is all a good sign. But again, there's so much of this regulatory issues, right? So I think why don't we spend a bit time talking about the regulatory trend? We know China is coming big, has really done a big wave of this whole thing. And how do you guys see this whole thing is emerging? Maybe start with Asia Pacific, and then later we can get our European colleague to also talk about it.
Okay, so I'm going to take it that Asia Pacific is probably here. I think that the Singapore government model is probably one of the best sort of examples of test case studies as to how do you deal with something that is not just necessary from a regulatory perspective, but from a technological perspective, difficult to manage. I think if you were to find its analog in traditional digital technology, the best analog would be the internet. It's like trying to bar access to certain sites. It's trying to censor your citizens or your user base from accessing certain content that you don't want them to access. Now we know for a fact that many countries do limit and do censor their internet access, and Asia is one of those regions where that's probably more prevalent than perhaps our colleagues in the West. But that having been said, that's why crypto and blockchain is particularly a tricky nugget to manage from a regulatory perspective, because the blockchain is censor proof. You can't censor it as long as you've got internet access. You can access the blockchain. You can conduct peer-to-peer transactions, and that's what makes it a particularly difficult thing. Even with centralized exchanges, we've seen, even with Binance and stuff like that, even when regulators so-called go after Binance or some of the other exchanges, they find, and once they start to unravel and dig deeper, you find that, hey, actually it's kind of difficult to go after them because of they have this tendency to hop jurisdictions. It has no corporate headquarters. It's a completely new way of doing business, which regulators are just kind of trying to wrap their head around. So the example that we look at least with the Singapore government and the Singapore regulators, how they look at it, I think it's a very pragmatic way to look at it. It's a bit like taking up the Hippocratic oath that doctors take. First of all, you want to do no harm. So as you regulate, you want to ensure that your regulation doesn't harm innovation, doesn't harm the ability of your citizens to use the blockchain for good measures, to do remittances in a cost-effective way, to innovate. So as a regulator, I think you take that first view and you recognize, okay, first let's do no harm. And then after that, let's try to go on and move further and see how we can do preventative work to prevent from harm from being wrought upon it. So what do some jurisdictions do? So like, for instance, Hong Kong just recently made it a requirement that you need to be a professional investor before you get involved in these assets. And that's fair. I mean, because you're saying that, these are investors who presumably have done their homework. They can absorb the losses as and when they do occur. So you protect your retail investors from the volatility and as well as the losses that could occur in this space. So you've seen different countries adopt different approaches. If you look at Vietnam, there were some very large scale scams that occurred in Vietnam, $750 million, essentially, long story short, it's just a Ponzi scheme, okay? So we saw that happen, but that in and of itself did not dampen demand for cryptocurrency. In fact, Vietnam is the number one adopter of cryptocurrencies in Asia. And if you look, some of the biggest projects, NFT projects like Axie Infinity, is headquartered in Ho Chi Minh City. So we've seen some of our best developers that work for us in Novum Alpha come from Vietnam. They're based in Ho Chi Minh, they're based in Hanoi. So we've seen that they've actually improved in leaps and bounds their technological capabilities. So regulators have to balance that portion, which is like, help providing their local populations with access and opportunities, and at the same time with the investor protections. I think in that sense, obviously coming from Singapore, I'm going to be slightly biased, but I feel that our regulators have done, they've approached it pragmatically, as always the case with so many things in Singapore, and that's how. I mean, there are different spectrums. China has gone all the other way, completely banned exchanges, banned ICOs, banned trading, banned everything. And yet we all know that so many Chinese still gain access to these exchanges and still do the bulk of the trading offshore or through the VPNs or through so many other conduits to gain access to it. So I think it's better for the regulators to say, look, you know what, this is a tough space. Let's work together with the stakeholders as opposed to alienating them and pushing them offshore.
Yeah, I would agree with that. I don't always see them working with innovators, and I'm very critical of my birth country, America. And that's, honestly, it's I wouldn't have the career that I have if I had stayed in America. I'm highly concerned right now about what's happening over there as far as the new stimulus bill they're trying to get through. If you guys are aware, they had some languaging that came out making it that if you're a developer, that it was a little ambiguous, but it could make it that developers would have to become broker dealers to even be developing on the blockchain, which absolutely makes no sense. It's like saying if you're a quant developer, for a traditional fund, you should become a broker dealer. That's not what they do. So I definitely have concerns, but I also welcome regulation to take care of investors because that is important.
Yeah, I think it's been very mixed. And I think, as Patrick points out, the Singapore model, I think, is by far the best model we're seeing at the moment. The Hong Kong model maybe potentially too restrictive. And then, I think very much as Erin points out, the US model with the potential rules there is just idiotic and makes it impossible. I think the whole thing is, it's really super interesting out of it. And this is a personal thing where, it's been something on my wall for the last 6 months, is that DeFi will be the answer over the next however long, but I think 3 to 5 years minimum. And that is the amalgamation of centralized KYC elements with DeFi elements. And I think you'll see that that will really take off. I think that is potentially, coming back to the question before, Meng, I think that is the one aspect where you can potentially see some retail flow into the space, and especially into the sophisticated managers, is through that type of platform. So we're incubating a platform at the moment, which will not be obviously technically, within Australia. It'll be a BVI entity that will issue the platform, and on that platform, it will have first-class hedge fund managers from the crypto space that users will be able to access. And from that point of view, we are using essentially regulatory arbitrage. We're using the benefits of blockchain and of crypto, and potentially being able to bring, as I said, world-class product that is that retail users are excluded from to them via an app, which I think that's going to be something that's very interesting. I think we can just see that is going to become. I think it's interesting. so Dave and I have known each other very well now for almost 5 years, and I look at the situation that Dave's in, where they're developing a high class, excellent product here in Australia. It should be an ETF. It should have been granted the license for the ETF already. The fact that it hasn't not, is quite problematic in my view. Because why should it get that? Well, because it's offering retail users a great way to get Bitcoin exposure. It's being managed in the right way. It's got great technology behind it. It's got people behind it who are serious persons who have, invested a lot of their own money and time into the space and the fund. I think that's an unfortunate thing. I think the regulatory space, the Chinese crackdown, I think was very, very interesting, unexpected, obviously, but also the way that it came about, targeting both users and miners also was quite unexpected. I think Europe's a very interesting case where obviously the UK authorities have been, seemingly quite negative towards it. They've very much taken the viewpoint that it's a CFD-like product and the person involved in it are CFD-like promoters and operators, and therefore we're going to apply the CFD restrictions that ESMA and the UK have put in place now, which has really killed the leverage trading industry over there. But the funny part is it doesn't stop leverage trading. All it does is it just turns again. Leverage trading industry has turned into the DeFi before DeFi existed. It's just a whole bunch of guys run these brokers and exchanges out of God knows where, and people still send us money. We've literally in Australia had a massive round, like we're talking about before. Patrick's talking about a scam that went through Vietnam. Australia at the start of this year had a incredibly large, sophisticated identity theft scam that came through. And the reason was that most of the people getting scammed were getting told they're sending money to, St. Vincent's Grenadine and other, small nations where there is no licensing regime. And people still send the money there because they just want access to these opportunities. So, it's the regulatory environment. I think everyone on this panel is come from a, very, very high-end professional background. We understand how regs work, why they work and how they should work, and why they're good for investors overall and why they're good for the market overall. I mean, again, as a person who, hopefully sees that this is my retirement industry, I'm all for regs because they're just going to get more money into the industry faster, and that's great. That's great for me. So, but I think we just need to make it that they're fair and good for retail users so they can still get access to this high-end product and the high-end persons and creatives that are out there. I think that's the best part. That's one of the best parts of this industry is how just the talent that's come into this industry, like Axie. Same like Patrick, I've been involved in that. It's something I've watched very closely. And as you said, the involvement of Vietnam in that project's blown me away. The amount, how good the quants and the devs out of Vietnam are is first class. And it's, for a country that is really developing itself and bringing itself forward, the schooling, all the things there that other countries should aspire to. Other countries who are in equivalent scenarios should say, that's a great model. We can do that. We can become a powerhouse because of crypto and because of blockchain, and hopefully countries allow regulations to allow that to occur.
Yeah, Grant, you're lucky that the Australians are seeing this as retirement. I think Southeast Asia was seeing this livelihood survival, just another dollars for the bread,
Yeah.
Okay. Yeah, but I think we'll see this more, and this will come in more and more with NFT. You see the next generation of the people are now banking on their savings from their parents, or they are looking at it as not just as an investment tool, but money-making tool via the NFT gaming platform, right? So with this trend, I think, in my opinion, is going to be more extreme, and this is worrying. Of course, also on the other hand, is accessing to more opportunities for the young people. So how do you guys see this trend emerging, and what is the kind of risk that you had observed?
I think maybe to start off, also maybe in combination to the point before. So from European regulation, this new trend definitely makes it even more difficult for regulators to grasp it. In Europe, they're still discussing frameworks to understand the existing market. So this will definitely not make it easier for them. And the NFT space and the DeFi space is a very, very interesting new development. I mean, it's been around for quite some time. I see that there will also be discussions on efficiency. At the moment, many are still working kind of with Ethereum. Again, there will also be some efficiencies happening. And I think the risk is that maybe as it is such a new form of the market again, it will be overvalued in the beginning, and there will be better NFTs coming, more sophisticated, which bears the risk that those early days kind of are devalued then. So that, I think there we will see on the technological side also a lot of innovation coming still.
I think just to add on to Dominic's point, when it comes to NFTs, this technology, the concept of having NFTs is not new. If we go back in time all the way to original Bitcoin, the idea of colored coins, so that you have special colored coin wallet addresses, that was already something that was mooted in the very, very early days of Bitcoin. So the concept of NFT, the ERC 721 protocol standard, none of that is new. What we have seen that is new, and which is perhaps the most important thing with respect to NFTs, is that you have a storied auction house like Christie's now auctioning off a digital NFT. Now, NFTs have the capability to create digital scarcity in what we have come to take for granted as digital abundance. Because a Control-C, Control-V, anybody can copy and paste anything. And now you see that people, investors, traders are willing to put real resources just to prove ownership and authenticity. Now, mind you, that doesn't mean that you've proved scarcity, because anybody can copy Beeple's the first 5,000 days. Anybody can copy that. Replicator, anybody can copy that. It's just any of the, even the one that Visa bought with the red lipsticks, I think it's CryptoPunk 7610. Anybody can copy that. I've got a dozen on my desktop. It makes no difference. But only Visa can own the original NFT. And what we've seen is that there's this shift, this perceptual shift, that people value that. It's a bit like, when China first started off, and everybody kind of knows that China was very famous for the production of inauthentic designer goods and labels. But that economy very quickly moved away from it, because the wearer of such articles and items knew that they were not wearing authentic items. And you've seen that as a society, as economies develop, there is a greater premium put on authenticity, and that's where we see that value proposition that NFTs provide. But that having been said, and again, we come back to regulation. So clients of ours always ask us about NFTs. So I always say that, look, approach NFTs as you would approach art. If you like it and you're happy to part with that amount of money to say that you own that, then go ahead by all means. But if you see this as some sort of speculative play where you're looking to bet on a Monet or something and expect that Monet is going to quadruple or quintuple in price, then you have to recognize that is a speculative gamble. That's not an investment. An investment is where you can have sort of like predictable yields. You can project 3-5 years ahead of time where you expect it to see, is it inflation protected and blah, blah, blah. But with an NFT, you just don't know that. So you've got to like it. You've got to make sure that this is something you are comfortable with, because you might end up owning it for a very long time and you might be the only person who actually values this. Now, then we've had clients who approach us as like, could you then tokenize real estate assets as an NFT, which is, again, the tokenization and fractionalization of rather illiquid assets, including private jets, art, real estate, anything else which you couldn't ordinarily fractionalize. I always stress to clients that the tech stack is not the difficult portion. It's 11 lines of code, essentially. It's not rocket science. But the difficulty is that, what about the legal stack? The legal stack never catches up. The legal stack is always 10 steps behind. So let's say now you own an NFT that's a fractional ownership of, say, the building that I'm sitting in. What does that mean in a legal perspective? If you brought this claim in court, if you brought the claim as a minority oppression, what could you get done? Which court would then enforce to say, hey, you know what? This NFT holder's equity and legal rights, beneficial and equitable title to this property has not been enforced. but and how would it stand? So when it comes to NFTs, it's going to take quite some time, I think, for that the law to catch up and then recognize the technological potential of NFTs. But I think that at least from the art perspective, I know of teenagers who paid thousands of dollars to buy NFTs, and I understand that because I'm a gamer myself. I play Warzone, so I pay tons of money on all those skins just so that my character looks different, and it doesn't make sense, but it makes sense to me because I want my character to look different. So if you're like me, then you'll get NFTs. But if you're not into that sort of thing, then and if you're really looking at it as just like a speculative investment, then recognize that that's what it is. It's a speculative investment which you could probably lose everything on. But for me, I appreciate the aesthetic, so I think that's what I'd say.
And Meng, I'd throw one other bit in there around them. In terms of what it means to the ecosystem more broadly. I mean, you mentioned at the outset about NFTs being in the gaming space originally, and just what that means for adoption. Like, I personally invested in Bitcoin back in 2015, and then by about 2018, I actually started to get annoyed because I couldn't see how Bitcoin was, from transactional perspective, was going to get adopted. And that's when the gaming NFT started to make sense to me because, I could suddenly see these digitally native kids engaging, wanting to transact or transfer value of the skins they buy inside their games, etc. Like there was not a lot of harm inside that space. That originally there wasn't a lot of money being transacted, but there was a lot of adoption. Or the potential for a lot of adoption. So going from an ecosystem of 20 million people to 200 million people very quickly using this blockchain technology. So from that perspective, I personally think it's a great thing. But of course, as an investor, it's a very different kettle of fish. Like, there's a risk spectrum within the digital asset space. And obviously NFTs in their current form are at one, very extreme end of the risk spectrum relative to some of the other more regulated or more well-known assets like, Bitcoin and Ethereum, for example. So it's just kind of like understanding where these things fit on the risk spectrum within the digital asset space. And there's room for everything. It's a, broad church. But from a regulatory perspective, the more money that flows into NFTs quickly, the more the regulators will have to sit up and pay attention because of the risks to the consumer.
I think it's an interesting, that's a really interesting question. I think to be honest, I think a lot of regulators, in the best way I can put it, have snookered themselves though. I mean, so Australian regulators, for example, are a good example of this, where we've deemed Bitcoin to be regulated alongside gold, and then you cannot, from the point of view of an artwork, of course, that would be, at best regulated alongside a something like gold or Bitcoin is in Australia at the moment, and therefore that extends into an NFT. Maybe you can make an argument that it's some derivative or something up, but I mean, realistically, it is not. It's a claim, or it's a representation of a physical good, or is a physical good to the extent that it is, on a USB stick, or it's being shown in a gallery via a smart frame. That is the asset. At that point, it is trading in an asset, a physical asset. And the world regulators have always been obviously very afraid of trying to regulate the trade of physical assets, for the purpose of the fact of the matter is the largest speculative market in the world is the property market. Most people might not ever, own equities or own FX or gold or crypto or anything else, but they always, at least, oftentimes they'll own a house and they'll try to speculate upon that house. And so at the moment where NFTs very much sit is in that real world good sense. And I think, it's a real conundrum that they're going to face where you do that, because I cannot, as a hand on heart person who thinks that I think, like, we've touched on many times here on this panel, like, no one wants to see, investors suffer loss for no good reason in what's a speculative bubble. And, as a person who, myself, I wouldn't say I'm hugely involved in the NFT bubble, but, and definitely somewhat, But do I know some people who are? Yes. Do I know that guys are at the top of the ecosystem? Yes. Are they the smartest guys in the ecosystem? Absolutely. Do they know how to play every game known to man to, move prices in their way they want? Completely. So we're talking about, potentially, retail level persons being involved in, the best way I can, put it, as I always look at financial markets like an ocean, right? You've got, the whales are at the top and they, cause some splashes, might hurt some people, but realistically they die. The sharks eat them, and then the sharks at the top are really of the ecosystem, and then there's the krill, et cetera, and you need everyone in between to be a good ecosystem. Well, the problem at the moment is that the sharks are definitely in the NFT world are very aggressive and are very skilled at being sharks, and that's going to end badly for, I think, majority of NFT investors. Patrick's point, though, I cannot stress enough, the same thing. If you like the artwork, if you like the object, if you like the sword, the skin, the whatever it is, special, house in metaverse, pay whatever you want for it, because, again, that is just human. We've done that as humans since day dot. I mean, you can go back to any ancient tribe, any ancient civilization. There was always artworks, there was always treasures, always intricate, things buried with everyone, because that's a universal thing as humans. We value cultural discovery via physical artwork, and that is just who we are. And that's why it's worked, is because this is tapping into a deepest thing of being a human and of human consciousness is the NFT craze. That's why it's not a craze, actually. That's a bad word to use. To discover digital art and digital goods is amazing. And I think we're just seeing that. We're just seeing humans go through a massive leap forward in our evolution. And it's exciting, but it is very dangerous for certain elements also at the same time.
Absolutely. And I also want to also chip in. I think it's no longer an ocean. It's a big Amazon forest. Everybody is thirsty and hungry. Yeah. So I think in the interest of time, we left with one more minute. How I wish I can have another hour with all of you. But as a moderator, my job is to round up this whole session, and with you guys giving a takeaway. And like always, as an investor, I like to always ask this question: give me a minute elevator pitch of the key takeaway. If today I'm considering your fund, so what is the key takeaway that you would like to share? Perhaps Patrick first.
Oh, okay. Thank you. Sure. Basically, and this is something I just said to one of our clients this morning as well, because he asked, what's the difference between your crypto quant fund and any other crypto quant fund? And I told him very frankly, I said, odds are, given the current stage that the market development is at right now, you're probably just going to do just as well, whether you go with us or whether you go with someone else. I mean, at the end of the day, what you get with us is that we want to make sure that you have a good relationship, not just with us, but with the underlying asset class as well, and that you gain more than just an investment opportunity, but you gain an education as well to understand the asset class, to understand the underlying, to understand the ecosystem as well. Because really right now, where we are in terms of the market cycle, where we are in terms of development, we've got at least a good 3 to 5 years ahead of us easily before the institutions and the regulations start coming in full on, where a lot of the alpha is going to be traded away. So from now to that time, even a discretionary long fund is likely to do very well. So which shop you go to really depends on, and I don't want to pretend like we have this magic black box, because a lot of the strategies that we're using are strategies that were adapted from FX, from commodities, from traditional equities and stuff like that, which we have adapted to suit the cryptocurrency space. And for us, what we believe in is simplicity and transparency, these two things. As an investor, I think you deserve that, because this is your money. So we want to work with you, and we want to cultivate that relationship with you, which is what we've done all these years with all of our clients. We have big gala dinners back in the before times when those were actually possible, and we want our clients to get to know each other, because as you grow, we grow as well. So if you're just looking at us in terms of pure performance, then that's really not the kind of relationship that we're looking to build. We're looking to build in a way that adds value to you, and so that we can grow together as you gain exposure to this asset class in a sensible and logical fashion.
Absolutely, Patrick. Yeah, thank you. Erin?
There we go. So yeah, I would say for the main fund that I work with, Iconic Capital, it's an amazing team of experts who were doing quant trading in the traditional world. Our compliance officer came from ING, so they're at the crossroads of traditional and crypto, and have outperformed the price of Bitcoin for the past 4 years. And I just, I love working with them because we're at the Amsterdam Stock Exchange and we're a registered fund with the Dutch government. We also have a DeFi fund, and it's a DeFi fundamentals fund. And we also have a delta neutral fund, which is very interesting for investors to reduce risk, especially when the market goes down. So we kind of have like the ice cream shop of crypto funds, and we plan to expand that as time goes on.
Good. Dominic.
Yeah, hi. For us, decentralized technologies is our passion, it's our vision. And I think we don't have to discuss that it's going to be the future. And we see that from an investor's perspective, you have to diversify in the space. And to get a holistic exposure in blockchain, you have to consider token investments, more liquid S strategies, as well as equity, traditional venture. If you want to get exposure within Europe in the entire blockchain space, then we are probably the right guys to do that as a partner. And I see that with Patrick as well. You want to build a long-term relationship with an LP, and most of the time, and that's as if we look at our LPs and the relationships we've built, in the beginning, it's more an educational ticket. It becomes more and more serious over time. And we're happy to guide our LPs along the way.
Thanks, Dominic. Grant?
Yeah, well, first off, I'll have to just say basically, if you really want to look at good quality funds, come to Australia. Whilst they might not be domiciled here, I think Australian fund managers are some of the best in the world. I think 3 of the top performing funds in crypto are ran by Australians or Australian guys living in Australia. First of that, I think the secondly thing is, you've got to ask yourself, where else are you going to get volatility? And we need to get rid of the old the post 2008 mantra that volatility equals bad is a silly idiom. We need to understand that volatility equals growth, growth equals prosperity, prosperity equals happiness. You need to tell investors that. And the last one is nothing to do with investing, but if you're 17 or under, you need to be learning how to dev in Rust or Solidity ASAP, and be reading the white paper and everything you can about crypto, because by the time you're 25, your entire existence is going to be defined by this ecosystem.
Yeah. So last but not least, mate, what about also giving a free surfing lessons?
I'm no surfer, but I'm sure Dave could do that.
Okay, David.
Meng, thank you for hosting the panel. It's been a great discussion. So basically, we are a staid, conservative, regulated, passive structure where any investor, wholesale investor in Australia, can invest in a unit trust to get 1-to-1 exposure to Bitcoin. So there's nothing terribly romantic or exciting about that, but it's a safe pair of hands in a regulated environment, and you can talk to your advisor about us. Many advisors are becoming familiar with Monochrome and what we do. So if you want exposure to the asset class and you're not sure where to start, Monochrome in our Bitcoin fund is a pretty good place to start.
Good. All right. So, ladies and gentlemen, again, thank you very much for your feedback and your contribution. It's been very insightful. And to the audience, if you have any other questions, or if you like to, invest in all of us, please send us an email. We'll be very delighted to serve you. And please continue to engage us via email. We are always here to answer your some of your doubts. I think this is a trend that is going to be further accelerated, and I'm hoping that we all will contribute in this growing sector and bring this into a sustainable asset class.